It's okay if you keep your mobile phones on, because they're really mobile computers, and you might want to be using them during the day, during the talk. How many of you have a Twitter account? Wow, that's fantastic. I mean, not that I'm trying to shill for Twitter, but I think if I'd asked the same question a couple years ago to a similar audience, it would have been much lower. So I'm going to start. I don't want to spend too much time. What I thought I'd do is hopefully, my goal is to set a context for the rest of the day, sort of high level, where we are, what the opportunity is in a macro sense, and give a few examples to sort of buttress that. It's a great quote by Clay Shirky, the professor at New York University. This is really the crux of the problem for large organizations or established industries, which are made up of large organizations, and why they find it very, very hard to innovate, certainly to do disruptive innovation. I want to start with a couple stories just to contrast, what can be and what is. 2006, there was a company at the time called Weatherbill. It's now called the Climate Corporation. That started up to really to give businesses, it was a very sort of high-level mission, give businesses the ability to hedge their weather risk. They've, over the last 5 years, they've grown tremendously. They just raised $50 million in a Series C round. They've raised a total of $100 million to date now. They're very much focused on agriculture. That was part of their journey. But the interesting thing is that they are state-of-the-art, very granular weather risk, or even more specifically for farmers, crop risk management. And they built this engine as a startup in 5 years. I mean, it wasn't overnight, but it hasn't been there for decades. On the original infrastructure was probably built for a few $1 million. Now, as I said, they've raised over the last 12 months about $90 million. That's really to scale the sales, scale business. But they've proven that the platform itself, the technology platform, if you will, was built for millions of dollars, not tens or hundreds of millions of dollars. And this is something that on paper you would think hard for a startup to do. And why wouldn't the big players in insurance or risk management, the AIGs, the Swiss Re's, I think Morgan Stanley at the time was quite active in weather risk. Why aren't they doing this? And the reason is that there will come, hopefully over the day, discover that there's real challenges for large organizations to do this kind of innovation. And it's not an either or. And again, one of the conclusions I hope you come away from today with is that it's an ecosystem, and that financial services in particular should look to other industries and start embracing what's going on the innovative side. The large players in this industry are unlikely to disappear. Some of them might individually, but overall they probably won't. You have in telecoms, AT&T still exists. It's a large company. What's striking, if you've had time to read this quote, is the amount of data that this company processes. It is enormous. Again, impossible to do 10 years ago. Impossible. Very expensive to do, 5 years ago, 6 years ago. But the guys that founded this company, they came from Google. They were very familiar with managing very large data sets. And they saw, Moore's Law, the cloud. The back of the stack is on AWS. You couldn't really do this. Or they would have needed to raise $50 million up front or $100 million up front or more 10 or 15 years ago just to build out the hardware, even if it theoretically existed, to manage these kinds of massive data sets. They price, it's amazing, very, very granularly on an acre by acre basis. So this is compare and contrast. This is another sort of data-driven process. You call around, you call 10 banks. What's your opinion of what the rate might be this morning? And then you use a very high-powered algorithm called a trimmed mean, which I won't go into the details. It's too much math. And you come up with a number. It's a bit of an anachronism in today's world where a high school kid can store terabytes of data on AWS. And the irony is actually the organizations, the institutions, the banks that are involved in doing this, they have all the skills and know-how and technology, hardware, software, and use it in other aspects of their business to process, massive data sets. So I would, I'm not going to go into that, but I'd suggest there's a better way. But it's the reason that the better way hasn't yet been adopted, maybe it will now, is not because of the technology. It's because of the culture, the inertia, and the constraints that large organizations face. So the backdrop to this, if you haven't read it yet, I should probably start trying to get commissions on this or something. But economist who's a Venezuelan economist based in the UK, Carlota Perez, wrote this book on technological revolutions, financial capital. It's a great backdrop to sort of understand how technology changes, interacts with our economies and our institutions and changes things. And, we're just coming out of, 250 years of what, called the industrial economy. And you had various different periods, every sort of 50, 60 years, a major technological revolution that sort of threw all the cards in the air, changed everything. And what happens is technology happens first, and then all of our institutions need to change and adapt to it. And by the time they have, that usually takes about a generation or so, a new technology arrives and we start all over again. And there's oftentimes in our thesis a short period of a golden age where the society and our institutions are aligned with the technology and economic environment, and then it all starts again, creative destruction. In 1971, Intel announced the 4004, ushered in the age of information. 2006, I think, is another interesting point. Maybe this is the next technological revolution. I picked out Amazon launching AWS. They actually did this on a blog post. They announced this to the world. This is this whole idea of cloud computing and networks is fundamentally transforming us. And our thesis is that we're exiting the industrial economy and we're entering the information economy, and that has enormous implications if it's true. We believe it is, because again, all of our institutions, and I don't, we can speak for days on this, but from education, politics, our corporations, everything is optimized and worked very, very well at the end of it. Was optimized over 250 years for the rules of the industrial economy. And now we're entering this information economy, and I don't think it's by accident that there is a lot of turmoil politically, socially, culturally, economically across the world, especially in the Western world, which is so well adapted to the industrial economy. The emerging markets or some of the developing markets, I think, actually have an advantage having not adopted necessarily all the and ingrained all the institutions and functions of the industrial economy. What does that mean, moving from an industrial economy to an information economy? Well, at a very, very high level, very oversimplified, we think that the model of the industrial economy, the optimal model of the industrial economy, is very much vertically integrated. And this is whence the large integrated corporations of the 20th century emerged. General Motors, the big banks, big insurance companies, look across any industries. It was all about economies of scale, optimization, vertically integrated. In a networked world, in an information world, the advantages of that kind of structure are becoming overwhelmed by the disadvantages, and the advantages of having a more distributed, networked organization, way of looking at the world, is, we think, coming to the fore. And we use the IT metaphor of a stack to sort of deconstruct. We focus on financial services, but I think you can use this metaphor for many industries to deconstruct the industry. And our vision is, in the future, you'll have a much more varied structure where people will specialize in different areas of the stack. There might be some vertical integration, but there'll be a lot of collaboration and cooperation within the network. Aaron Levy's the founder of Dropbox. He's a very young man. A lot of these people are very young. And Dropbox is now a massive company, started only a few years ago. But I think he nails it in this quote. Again, it's not about the technology. Financial services companies, banks, insurance companies, they have some, they have been and they continue to spend billions of dollars on technology. They have some very, very good technology. It's about the culture. It's about, how they approach their business models. So a few of the trends that we see as important, big data is almost become a cliche, but we're talking about the ability to manage, analyze, and process massive data sets in real time. And one of the companies that we've invested in is a company called Metamarkets. The data processing stack that they can build can index 1 billion lines in under a second. They manage petabytes of data on a daily basis. This is a startup. This is orders of magnitude. You could take all of the transactional data in the banking world and put it into that kind of an engine. I mean, the kind of data sets that can be managed now, go far beyond what we need in financial services or traditional financial services. Lots of opportunity there. Consumerization. So just the industrial economy, everything used to trickle down. Something would be invented. The government would spend billions of dollars inventing something, maybe at NASA to go to the moon, and then eventually that technology would trickle down through big corporations, used in business, and then 30 or 40 years later would end up on the kitchen table, or in the home. That paradigm is being flipped on its head. A lot of the most innovative technology or use of technology is emerging from the bottom up. It's consumers that are adopting it first. I mean, how many people here think they have as good or better IT at home than they do at work? Okay. I think that's, if you'd asked that question 20 years ago, there would maybe be, nobody would say that, or you'd have to be a super geek hobbyist, perhaps. The gadgets we all have in our pocket are driving change. Gamification is another trend that we see. It's a little bit, people can dismiss it, but it's a more serious way of calling gamification is behavioral psychology. We are driven by a lot of rules in our brains. We're starting to get very deep understanding of these rules. They're not just emotional or psychological. They're actually, a lot of them are neurochemical, neurobiological. They're hardwired. You can, this is one of these classic ones. You can be Dr. Evil with this knowledge, or you can use it for good. But it's something that's becoming more and more important. A lot of times it was latent in some of the business practices of the late 20th century, in the sense that people stumbled upon these ways of selling things or enhancing behavior. Disaggregation, amplification, that comes to the stack, and everything going to a service. So, again, this idea that innovation needs to come from the bottom up, not from the top down, if you want real, true disruptive innovation. This is where large companies struggle, and our thesis is we need to marry large organizations that have advantages and as I said, are unlikely to disappear, but we need to bridge that gap, that cultural divide between startups and large companies if we want to build a more sustainable and robust financial system. We look at the world, we sort of split it into these buckets. They're kind of arbitrary. But just what I want to show you here, I'm not going to go into any of this in any depth, but there's a lot of things going on. In personal finance is probably, because of that consumerization play, is one of the areas where there's been the most disruptive innovation. It's probably the most mature, and I say that, it's all in relative sense. We're talking things that are sort of 2, 3, 4 years old. There's a lot of startups in this space. One of them, Simple, we're invested in. Markets and trading, a lot going on here. Now, markets and trading have always been certainly for the last 20, 30 years, very technologically intensive. But that was more about optimizing, making faster, stronger, better existing ways of doing business and existing business models. Some of these startups I've tried to pick out are people that are really disrupting the way that business is done. eToro, I think, is the future of trading. You can crowdsource trade ideas. You can follow traders. This is the new managed account. This is the new hedge fund where the best traders emerge out of the crowd. StockTwits is a fantastic community. There's a lot of traders on Wall Street now that StockTwits is often blocked by firewalls, and trading that are looking at StockTwits on their personal iPhone or iPad or Android because the information flow there is so valuable, but it's not yet within the corporate firewall. In the risk management space, I talked about climate corporation and wealth management. A lot going on here. Here's one of our. So we're invested in some of these companies, not all of these companies, but here's one we are invested in. It's called Betterment. It's the Apple of wealth management or asset management. There's a lot of complexity, but they take it all the way from the user. They allow you to very simply set your asset allocation. They'll automatically rebalance your account. It's very, very cheap. Depending on how many assets you have with them, it's between 15 and 35 basis points. So, it's basically active asset management. Now, this is a solution. I personally feel you have the pensions mandate coming in the UK. This is exactly the kind of solution that people need, where it's robust. It has a good diversified portfolio underneath, but the costs are very, very low. You can set goals. You can see what your risk parameters are. You can set multiple goals. You can have 6 months. I'm going to take a vacation. I need to save for that. In 5 years, I want to buy a house. I need to save for that. The underlying asset allocation that you want for those saving pools is going to be different, obviously. In business banking, a few different things coming up. I think, Cabbage, this is working capital finance for eBay merchants. And it's very data intensive. They take the data that's generated. There's so much data that's generated now by electronic transactions. They take that and they use that to underwrite working capital. This is, banks aren't lending to eBay merchants. This is a great business. And banks aren't lending to them, not because banks are dumb, but because their model isn't adapted to lending to these kind of businesses. The business model is wrong. Funding Circle, UK company, peer-to-peer exchange for small business lending. Again, I think, this is the future of the credit markets, right? And again, I don't think the banks are going to disappear, but I think that a lot of the origination function is going to disappear from the banks. The banks are going to be providers of capital to platforms like that. That's our opinion. Where, the problem right now, I have a lot of sympathy for some of the big banks. They're being told to lend more. There's not lots of demand, but the process is their business model isn't well adapted to lending into this market anymore at the price points and the costs that are prevailing. Payments, enormous amount. There's been a true Cambrian explosion in the payment space. There's literally hundreds, if not, probably thousands of startups, early stage and mid stage companies in the payment space. Some will emerge winners. One of them, they're in the room today, portfolio company of ours, we think is very exciting, Currency Cloud. It's basically a very thin layer in that stack, if you think of that stack metaphor, that allows any business, financial or otherwise, to transact very simply between one currency and another. And it handles it, hides all the complexity away and just manages that process. So, it's not replacing a bank per se, it's just making processes more efficient. And I think you'll see more startups in this vein in the space. Square, I think all of you probably have heard of, very famous founder, Jack Dorsey, very charismatic. They're reinventing the point of sale, right? And the whole point of sale experience on both sides, consumer and merchant. Are very, very highly valued as a result of that. So I think this is apt for the times that we live in. And I'm just going to finish off. I'll leave this with you. This is again an oversimplification, but if you're trying to look at this change from where we're coming in the 20th century, and all of our current financial system, I would posit, is optimized for that first paradigm. The business models, the way that they're structured, the way that they're capitalized, the way that they're organized, and it's going to need to move to the second model. And by definition, startups in this space, all those startups you saw before, are natively adapted to that. Thank you.